Imagine this. At just 11 years old, he bought his first stock and went on to become one of the richest men in the world. Yes, I'm talking about the Oracle of Omaha, Warren Buffett. With his unique investing strategies, he changed the world of finance forever. In today's video, we'll uncover how he built his empire through smart investments and what lessons we could take to apply in our own lives. What's good, execs? It's your boy Trey Cooper, and welcome back to the boardroom table. And so today, I'm kicking off a brand new series called The Investor's Playbook, where we're going to break down some of the great investors of all time and figure out how we can apply their strategies to our own journeys. And who better to start with than the legend himself, Warren Buffett, the Oracle of Omaha. And so before he was worth billions, he was just a kid from Nebraska learning the ropes, just like us. So let's dive in. Warren Buffett was born in 1930 in Omaha, Nebraska, and just at 11 years old, he bought his very first stock called Cities Services Preferred. And while he didn't make a fortune from that play, but what he did gain were two powerful lessons. First lesson of patience, and the second one was the importance of doing your own research. And that early spark, it didn't fade. In fact, it set the tone for how Warren would invest and approach business for the rest of his life. So by the time that Warren was a teenager, he wasn't just thinking about stocks. He was out here hustling. He sold gum, he sold soda, and he had his own newspaper route. And these weren't just kid side hustles. Each one gave him real world lessons about profit, cost, and customer demands. Those hustles built the foundation for him, but what really shifted Warren's perspective was mentorship. So Warren went on to go to Columbia Business School, where he studied under the famous Benjamin Graham, the father of value investing. And Graham's philosophy was simple, but life-changing. Buy undervalued stocks and companies with a margin of safety. And Buffett soaked up every single word. And that principle became the backbone of his entire career. And once Warren had the knowledge, it was time to put it to work. So after college, Buffett worked at Graham and Newman's Corp and eventually launched his own partnership. And his strategy was disciplined, invest in undervalued companies with strong fundamentals and trustworthy management. And that discipline, repeated year after year after year, is what allowed his wealth to really compound. And while Buffett's career is massive, the philosophy could really be boiled down to just three simple letters. Buffett's whole strategy could be summed up to just SEA. S stands for safety of capital, never risk at all. E stands for earning power, make sure you focus on companies with consistent and reliable earnings and dividends. And A stands for advantage. Look for a business or company with a moat, something that protects it from competition. So that SEA framework might sound simple, but it's exactly what turned a small investment into one of the biggest empires in financial history. So just from a curious 11-year-old buying his first stock to becoming the Oracle of Omaha and managing billions, Warren Buffett shows us the power of starting early, learning consistently, and letting time work for you. So don't chase trends, but understand business. Invest smart and let patience and consistency do all the heavy lifting. So this was episode 1 of the Investor Playbook. So what are you gonna do today to start leveling up on your investing journey? And let me know what investor you want me to do next. If you want to do Charlie Munger, Warren's sidekick, Elon Musk, or maybe McCappy Woods, or maybe even Elizabeth Warren. You know. Shout out to the NVIDIA bill. Subscribe for more breakdowns and real wealth building strategies and a seat at the boardroom table. So if you're new here, we have a motto. And if you're a real exec, you already know. Stay locked in, stay focused, stay invested, and of course, stay starving.